I think that Bitcoin is the only asset in the space that is broadly institutionally held, and it is more than zero. For example, we bought $4 billion of it, so we know that companies have it, we know that institutional investors have it, we know there are insurance companies that hold it. So it's not zero, but it is not nearly as broadly held as it will be. And I think that we're still early days. I think that the institutional interest in Bitcoin has dramatically jumped in the macro community and the hedge fund community over the past year. I think you can see in the body language and the rhetoric of J.P. Morgan and Goldman Sachs, Jamie Dimon, and the way that David Solomon speaks about it, and the way that BlackRock speaks about it, and the way that Ray Dalio speaks about it, and the way that George Soros speaks about it. You can see that we're no longer at the stage where people are skeptical that it will continue to exist or skeptical of its value. I think it's now got the grudging respect of a lot of people. We're really more at the stage where we're waiting for regulatory clarity. There's just a lot of political debates, at the DC level over how much friction will be in the space. I think the banks would like to see more clarity from banking regulators about how much they can hold on their balance sheet and what the reserve ratio would be. And I think the accounting treatment clearly has been a liability for large institutions because indefinite intangible is
Hello and welcome to Money Talks. In today's video, Microstrategy Chairman Michael Saylor updates about institutional adoption of Bitcoin, key factors behind crypto crashes, and his thoughts on the Bitcoin versus gold debate. He also shares his perspective on crypto market cleansing and Tesla's Bitcoin sell-off. Make sure to stick around till the end of this video where Michael Saylor reveals why he thinks we are in a recession and his $1 million prediction for Bitcoin. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. So, without wasting any time, let's dive right into the video.
I think that Bitcoin is a million times better than gold and is going to gradually demonetize gold over time. So, no, gold will go to the utility value of gold. Whatever that utility value is, but I don't think it's going to be adopted as money in the 21st century. I think Bitcoin is a better gold than gold. You can move it at the speed of light. You could see with the Lightning Network evolving that pretty soon we'll have 1 billion people able to move any block of Bitcoin anywhere friction-free. And so Bitcoin is digital money for the 21st century. Gold was metallic money for the 19th century. So I just think if you believe in sound money, then you should do yourself a service and you ought to sell your gold and you ought to buy Bitcoin because Bitcoin is sound money for the 21st century and gold was sound money for the 19th century. Just that simple.
In a recent interview, Michael Saylor, co-founder and executive chairman of NASDAQ-listed business intelligence company Microstrategy Inc., addressed his critics. It is worth remembering that on 11 August 2020, Microstrategy announced via a press release that it had purchased 21,454 Bitcoins at an aggressive purchase price of $250 million to use as a primary treasury reserve asset.
I think a great deal of the bad behavior has been flushed out. I don't think you can say everything. I think there's still a lot of unregistered securities in the crypto ecosystem, and it's undoubted that Bitcoin is cross-collateralized against some of those unregistered securities, and there's more regulation coming to anyone that's in this space, more clarity. So I think the worst of it is behind us, but I don't think that the industry has been clarified or completely rationalized yet. I think that there's thousands and thousands of cryptos that need to disappear, right? I think there's a 99% rationalization rate that needs to happen. And so I just think we went through an pretty important deleveraging And I think the people will be much more careful in the way they view things going forward than they were a couple of years ago. I think we were in a Wild West stage the first decade of the industry, and I think we need to grow. We need adult supervision in the industry, and there's an entire generation of people that need to understand counterparty risk and basic risk management, and they also need to understand the difference between a security and a commodity. And with all due respect, there's still a lot of people that don't really understand the ethical or legal difference between a security and a commodity. And until they grasp the nuance of how you create a digital commodity, they're not going to grasp the way to segment the market and the right way to think about all these assets.
Michael Saylor also said, "Our decision to invest in Bitcoin at this time was driven in part by a confluence of macro factors affecting the economic and business landscape that we believe is creating long-term risks for our corporate treasury program, risks that should be addressed proactively. Since then, Microstrategy has continued to accumulate Bitcoin, and its CEO has become one of Bitcoin's most vocal advocates. Microstrategy's latest Bitcoin purchase, which Saylor tweeted about on June 29th, means that the firm is now hodling around 129,699 Bitcoins, which were acquired for $3.98 billion at an average price of around $30,664 per Bitcoin.
We've been in a recession since March of 2020. If you calculated or if you estimated the economy based upon real output and then you adjusted it for the strength of the currency, if the currency loses 20% of its purchasing power and the economy is flat, then you contracted the economy by 20%. So the currency's lost 40% of its purchasing power in the past 2 years. If the economy grew 5%, you're down 35%. So yeah, we're in a recession, but I'm not a macroeconomist, and I don't really care to engage in the debate about what is the definition of a recession or not. Right, it's above my pay grade.
Microstrategy founder Michael Saylor has urged fellow business tycoon Elon Musk to buy some more Bitcoin. This came as a response to Musk's tweet suggesting that he is looking to buy English Premier League club Manchester United. To the Tesla CEO's tweet, which read, "I'm buying Manchester United, you're welcome," Saylor countered with, "We would prefer that you buy some more #Bitcoin."
They've still got some, but what I think is that the accounting is toxic, and FASB didn't need to address this issue before MicroStrategy, Tesla, and Square all bought Bitcoin, because there was no more than $1 million of Bitcoin in an operating company. So it was an immaterial issue. Now there are billions and billions of dollars of assets in publicly traded companies, so it's material. Lots and lots of people wrote to FASB asking them to take this up as an issue. FASB took a vote and unanimously agreed to take this up as a project, and they're working on the project right now. So we will see what they come back with. But for publicly traded companies with GAAP accounting, to adopt Bitcoin in a big way, there's a couple things you need. You either need to fix the accounting so it's not prejudicial and hostile to the ownership of the asset class, and that means at least make it kind of pari passu to holding equity or something. Like if you're holding equity, you take a mark to market and you have fair value accounting.
Musk and Saylor are both high-profile devotees of Bitcoin and believe in the long-term value of the prominent crypto. Furthermore, both billionaires have, at separate points, demonstrated their faith in the token from a purely business perspective. This includes Saylor shoring up a sizable Bitcoin stake via his cloud-based company, Microstrategy. Additionally, Musk has demonstrated a willingness in the past to accept Bitcoin as payment for Tesla electric vehicles, although he later changed his mind on this due to unwholesome environmental issues associated with Bitcoin mining. Tesla is an avid Bitcoin investor. The company recently offloaded $936 million worth of Bitcoin during the second quarter of this year.
I mean, if we're talking about what's caused the crypto crash, I think that it was triggered first by the interest rates, right? The tightening of the Fed. And that put pressure on all risk assets from the beginning of the year. And I think the next catalyst was the Terra Luna meltdown because in essence they had $50 billion worth of Luna and UST backed by $1 billion or $2 billion of real assets. So that was very unstable, and that algorithmic stable coin was just an accident waiting to happen. It's almost like they borrowed $20 billion and agreed to pay 20% interest on it. And they were going to issue equity to pay the interest. So they're going to issue Luna in order to pay 20% interest on UST through that protocol. And that was an accident waiting to happen. There's no way that was sustainable. So that melted down a lot of the cryptos and resulted in the unwinding of the Three Arrows, Voyager, and Celsius bets. And I think a lot of people took a lot of inappropriate risk, right? The cryptos were unregistered securities, but then loaning out hundreds of millions of dollars without collateral or under collateralized loans amongst the crypto hedge funds, that created a margin call run. And so they ended up becoming forced sellers and liquidating positions in a panic. And that took us all the way to 30,000. And I think the Celsius thing was the straw that broke the camel's back, where Celsius just completely unwound. And you had a whole set of panicked liquidations as counterparties seized assets and seized collateral and sold it at the market. So that's what takes the market down. And now the market, I think, has probably bottomed, and it looks like it's just looking much better. It's gone from 17,000 up to 24,000 now. But I make the other fundamental point. If you're a short-term trader, this drives volatility, and this is very meaningful. And if you had a weak balance sheet, this is devastating. And if you trusted any of the crypto wildcat banks, right, it's tragic, right? Anybody that put their money in Voyager or Celsius or the like, or gave money to Three Arrows, is awful.
Following Tesla's decision to sell off 75% of its Bitcoin stake for fiat, Musk quickly moved to assuage worried investors. According to the outspoken businessman, the EV company sold to ease COVID-triggered liquidity concerns. Tesla considered this necessary because of the prolonged shutdown in several Chinese cities caused by a COVID resurgence. At the time, Musk further suggested that the Tesla Bitcoin sale did not indicate a bleak prognosis for the token. Meanwhile, Saylor's business intelligence, mobile software, and cloud computing company Microstrategy holds the largest Bitcoin stake by a company globally. As of July 22nd, MicroStrategy held 129,699 Bitcoin. In fact, Saylor's company purchased 480 more Bitcoin tokens for approximately $10 million in June. This was the same quarter Musk's Tesla offloaded 75% of its Bitcoin stash. Saylor recently announced that he is stepping down as CEO as MicroStrategy. However, the seasoned businessman will remain as chairman of the company's board of directors. Following the announcement of Saylor's exit, effective from August 8th, MicroStrategy shares surged nearly 15%. Saylor was succeeded by former Chief Financial Officer and Chief Operating Officer Phong Le. So what do you think are the key factors that trigger the crypto crash? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.